Why can't you trade SPX on Robinhood? The S&P 500, a widely followed benchmark of American equities, is a financial instrument that many investors seek to trade. Yet one popular platform, Robinhood, has conspicuously excluded it from its offerings. This absence, while seemingly minor, is rooted in a complex interplay of regulatory hurdles, technological limitations, and business strategies. One surprising fact is that the S&P 500, despite being a cornerstone of American finance, is not a tangible asset. It's a theoretical construct, a basket of stocks that represents the overall market performance. This abstract nature introduces challenges when it comes to trading and settlement. Unlike individual stocks, which can be bought and sold directly, the S&P 500 requires specialized derivatives such as futures and options. Another lesser-known aspect is the regulatory landscape surrounding these derivatives. While Robinhood has embraced a commission-free model for many securities, the complexities of trading S&P 500 derivatives often involve higher costs and more stringent regulatory requirements. These additional expenses and compliance burdens can make it less attractive for Robinhood to offer these products. Furthermore, Robinhood's focus on a user-friendly, accessible platform might not align perfectly with the intricacies of trading S&P 500 derivatives. These instruments often require a deeper understanding of market mechanics, risk management, and hedging strategies. A platform designed for simplicity might not provide the tools or educational resources necessary for effective trading in this space. The decision to exclude the S&P 500 from Robinhood's offerings is also influenced by business considerations. The platform's popularity has attracted a large user base, many of whom may be new to investing. Introducing derivatives, particularly those tied to a complex index like the S&P 500, could expose these users to significant risks. Robinhood, by focusing on more accessible instruments, may be trying to mitigate these risks and protect its users. In conclusion, the absence of the S&P 500 from Robinhood's platform is a result of several factors, including the unique nature of the index, regulatory complexities, technological limitations, and business considerations. While this exclusion may disappoint some investors, it reflects the careful balancing act that platforms like Robinhood must perform between providing access to a wide range of financial instruments and ensuring the safety and security of their users.